There's way more to finance and accounting than just numbers. A lot of businesses don't recognize that. I'm Ryan Chenier, founder and CEO of Mastery Fractional CFO Services. My company and I work with a variety of small to mid-sized businesses. We specialize in construction and e-commerce businesses, but we'll work with others as well. And what we do is help businesses be more financially successful by providing financial leadership, management, coaching, consulting, and advisory services for CEOs. Today, I'm going to talk about finance and accounting beyond the numbers and outline some of the key considerations with respect to providing a financial perspective for a business owner that's looking to grow and scale their business profitably. All right, let's dive in, shall we? Finance and accounting beyond the numbers. This is my team and me, Mastery Fractional CFO Services. I'm the owner and CEO. These are some of my team members. I want to start by talking about the three pillars of business. The three pillars of business are sales and marketing, operations, and finance and accounting. Every business has three main functions or units. All three have to be great for your business to perform well. The success of any business rests upon these foundational pillars of business. It's a lot like a three-legged stool. If one of the legs of the stool is weak, then the entire stool is unstable. If you have these three components of your business operating well, the success of your business will be on stable legs. As a CEO or an owner of a business, anybody who's running a business, you quickly realize that you can only focus on so much at any given time. And when you're looking at the three main functions of a business, the three main business units, it becomes apparent that the CEO of the business, the person who's running the business, now this is a business that's growing and there's employees and there's things going on in the business already. But the owner can only focus on one or maybe two things at once in order to do a great job and to do what the owner can do best in the business. And that means that your attention needs to shift around these three pillars. Sometimes sales and marketing will be the focus of the owner, whether it be working with the vice president of sales or working with the sales team or developing a strategy for marketing. Operations, the owner won't be the one likely doing all of the nitty-gritty frontline work, but the owner still has to help develop the systems and the processes and make sure that the right people are in the right places, doing the right things. And then there's finance and accounting. You need to record keep for a business. Every business needs to keep records. But on the finance side, there's a lot more to just that. We're going to dive into that today and I'll explain it. Okay, so let's talk a little bit about what a fractional CFO does because this helps frame the conversation. I'll keep it relatively short. A bookkeeper records the company's financial transactions. A tax accountant focuses on minimizing taxes and ensuring compliance with government regulations. That's the focus. A fractional CFO provides high-level financial strategic oversight on a part-time or contract basis for a company. They assist with key financial decisions, including cash flow management, budgeting, forecasting, and scaling operations. And they identify areas for improvement. They support long-term financial stability and help drive the achievement of financial goals. This is really about trying to make the business better and helping the owner or the key stakeholders in the business achieve their vision of success. A fractional CFO helps improve the business's cash flow. That's not something ordinarily a bookkeeper or a tax accountant is going to be focused on. A fractional CFO is working with the key stakeholders in the business to improve profits, to help increase the value of the business, not just the shape of the balance sheet, not just making sure the financials look good, but how do we know for sure that our business, what is it worth? And how much is it going to be worth if we follow the right strategies? How much do we want it to be worth? What do we want our business to look like? What kind of a structure is there going to be? Is the owner going to work 60 hours a week, 52 weeks per year? Or is the owner going to take 3 or 4 or 6 weeks of vacation every year and they need somebody to run the business when they're away? These are all questions that we can help assess and evaluate and tailor to the individuals that are involved in the business. Ultimately, again, we want to help you achieve your vision of success and more. That's what a fractional CFO is focused on. Okay, finance and accounting beyond the numbers. What am I talking about here? Well, let's go around the circle. First of all, streamlined processes. When we work with an organization, when a fractional CFO comes in and works with an organization, they should be looking at the processes in the finance and accounting pillar or function of the business. What kind of bookkeeping records or systems are they using? What kinds of enterprise resource planning or ERP systems are they using? Management systems. There's systems and then there's processes. What are the day-to-day processes, the month-to-month, quarter-to-quarter? Is there proper processes in place to make sure that there's security, that there's fraud prevention, that the things are being looked after properly, that the business owners have the right information at the right time. It's a very important component, a basic component of finance and accounting. And a full-time on-staff CFO would be looking at this and managing this, or making sure that it's being managed within the finance function of the business. But a small to mid-sized business may not have that in place. And if the owner of the business is trying to focus on sales and marketing and operations and finance and accounting, likely this has been given short shrift. So a fractional CFO for a small to mid-sized business is the right solution to help analyze this. What else is there? Well, plan for growth. What is the plan for growth? What does the roadmap to success look like for your business? This is something that needs to be plotted out. Action items need to be assessed. You need to understand what it is we need to do to go from where we are now to where we want to go. And what's the timeline? Are we talking about 6 months, 36 months, 5 years, 10 years? There's a lot to look at there. But what's the value of the business going to be? How are we going to structure it? What's it going to be worth to us, to potential buyers? What's our exit strategy? Do we have an exit strategy? What about a succession plan? Do we have people that we want to bring up in the business who can help us run it so that it can run itself when we're not there? These are all questions we try to assess. And we want to make sure that we're building the finance and accounting function so that this will be looked after along the timeline that we put in place. Key performance indicators. Key performance indicators are the metrics or the data that we're looking at. From a financial perspective, those include things like revenue, EBITDA, gross profit margin, net profit margin. There's a variety of different kinds of key performance indicators. We look at dozens and dozens for different businesses. But the idea is that although we're looking at a variety of different metrics to try to assess the health of a business, much like a doctor will look at your blood tests or your x-rays to try to assess your health, we only bring to the business owner's attention those key things that they want to focus on, either because there's an issue or there's an opportunity for improvement. And that's fundamental. That's key. And that's why they call them key performance indicators. What levers are there in the business that need to be pulled to get the results that you want to get? The key performance indicators help us assess what that is. We look at trends, baselines, we set plans in advance, forecasts, and then we try to measure plan versus actual. How are we performing according to our targets and according to the past, and a variety of different things we can look at. The list goes on. Financial planning and analysis refers to the budgeting and forecasting cycle in a business. This can get very involved. You want to not just build a profit and loss forecast. You want to look at your cash flow forecasting. A lot of reasons why businesses struggle and have challenges is with respect to cash flow forecasting. And you want to look at trying to automate that and make it so that you're able to very quickly run different scenarios, show potential investors what you're looking at doing, understand yourself what it is you're looking at doing, what different scenarios there may be, different possibilities you may want to pursue, and choose the best one. Ultimately, this helps you make better business decisions, and it helps you put together a project plan for everybody in the business so they understand what they're doing and how it impacts the finances. Tools and cutting-edge financial software. I don't think I need to say it, but I will. Artificial intelligence is becoming more and more a part of what successful businesses need to utilize. But there's so much of it. You can't know it all. So what we do as fractional CFOs is we choose software that facilitates the processing of all of the information in a business. My team and I are experts at it. We are very proficient in the software, and we can make it so that it's easy and seamless for the business owners, but they can utilize the information that comes from having the proper software in place. Management accounting. Well, most of the time, your bookkeeper and your tax accountant are focused on your financial statements, and those are required to be compliant with government regulations. Management accounting gets into other components of your business. We specialize in construction businesses primarily, and with construction businesses, work in progress is a big component of what you need to understand. Job costing comes into play, and these are things that are not ordinarily found on your profit and loss statement or your balance sheet or your cash flow statement. These are things that you need to look at from a different point of view. There's different ways of managing it. You're not doing it to be compliant with government regulations. You're doing it so the management team of the business has better information with which to make decisions. Methods for allocating resources to produce the maximum return on investment. There's only so much money and there's only so much time in any given business. A big part of what we're trying to do is help the business owners very quickly understand where should we be spending our time and money on not just finance and accounting, but on sales and marketing, on operations, in order to get the best return on investment for our time. Fundraising. There may be times in the business where you've got a plan and it's a good plan, but you don't necessarily have the cash to execute upon that plan. And so raising funds is a big part of what a fractional CFO can do. There's a variety of ways to do that. In some cases, you just want to make sure that you're creating a safety net. And so putting in place a line of credit and different things you can do with your financial institutions that isn't borrowing money, but that's preparing for potential difficult challenges down the road. It's all a big part of what goes on beyond the numbers. Plan for paying down debt. If you do have debt, what's the plan? Let's build it into our forecasts. Let's make sure we understand how much principal payment there's going to be every month, how much interest payments there are going to be. Let's make sure we consolidate debt if there's an opportunity to make things better. Let's analyze this properly and make the best decisions possible so that we're not starving any other component of the business. So we're not being killed with interest rates and fees and additional challenges with respect to cash flow. Investor relationship management. If you raise funds or you've got debt, managing your relationships with your investors, your shareholders, your financial institutions, the banks. This is a big part of what we can get involved in so that you don't have to. We can meet with your bank. We can discuss the financial planning and analysis that the business has in place. We can talk about a variety of different things with the bank that would save you time. We can come back to you with the Coles notes, debrief, come up with a plan regarding the next steps, move forward. But you want somebody to be able to manage the investor relationship. That's not exactly debits and credits and punching numbers into a calculator. There's a lot of business acumen that goes with this. There's a lot of experience that's required to do this right. And this is something we can do for you. Executive level financial leadership and oversight. Well, this really encapsulates everything we've talked about today. Being a CFO, it's a C-level position. Executive level experience, education, knowledge, it all comes into play and it's all required to make things go right. There are good CFOs and there are CFOs who aren't so good. I'm not going to say that everybody has to have a master's of business administration to be a good CFO. There's other paths towards being a good CFO, but you do need somebody with solid business acumen, a lot of experience, and somebody who understands way more than just the accounting and finance part of the business, because operations and sales and marketing are equally important. And the relationship amongst all three of them is extremely important. There needs to be alignment and there needs to be an understanding of how the different parts of the business can impact your finances. At the end of the day, your plan, your vision of success, whatever that might be, we can translate that into numbers, and then we can help you achieve the milestones along the way to make sure that you actually are tracking towards your success, your vision of success. And when you're off course, we can figure that out early and we can make course corrections. We can work with you utilizing these components and more to help you achieve that vision of success for you and your business. There's a lot of reporting that goes into this. There's a variety of different dashboards that can be created. The whole idea here is to give you the information you need at your fingertips to help you interpret it and to help you use it to make better business decisions. So the bottom line is, this stuff matters. It makes a significant difference to cash flow, profit, business value, and achieving your vision of success. Key takeaways: you don't have to be the expert with the numbers, but you do have to understand your numbers and use them to make smart business decisions. And so if you need help, it's here for you. I'm Ryan at Mastery Fractional CFO Services. I provide a free initial consultation. I'll discuss this with you and there's no cost. We can talk about you and your business and what might be the best fit for you. But I encourage you to look into this, because if you're thinking that finance and accounting is just the numbers, it's a lot more than that. You do need to know your numbers, but you don't have to be the one who crunches them, and you don't have to be the one who's managing all components of your finance and accounting function. We're here for you. I encourage you to check out our other videos, and you can find us on social media as well. And you can check out our website. And as I say, you're welcome to speak with me directly.